Hi, this is Freya. Today we're going to study a little bit about the accounting technique of the breaking into Wall Street, about the investment banking interview preparation questions. So let's go to the basic logic first. So overview of accounting in investment banking. Let's go to the next slides. First is about the importance, why we have to study accounting. Basically, accounting questions help interviewers better understanding the candidate's comprehensive of fundamental financial concept and their ability to apply these concepts effectively in the real life scenarios. Essential areas often include financial statement analysis and the interrelation of accounting records and financial modeling. So that's why we need to pay more attention about the technical side of the accounting. And then there's like a categories of the accounting questions that we need to focus. So there is like four main categories that we need to focus. First is the conceptual questions, and second is the single step scenarios, and third is the multiple step scenarios, and the third is the advanced accounting queries that we need to pay attention. And each category serves to test the different level of understanding and analytic skills required in financial role. And the third we're gonna go through is about to understand those statements. That's these main things that we need to understand. First is income statement, second is balance sheet, and third is cash flow statement. And we need to understand how to link these statements and recognize the importance of cash flow in relation to profits, which is crucial for the success of your interview. And then we have to prepare for the basic question and also advanced questions. And but first we need to be more focused on the basic one. Then we can go to the next step to focus more on the advanced questions. Okay, so right now we have to make sure that we understand the key financial statements. There's like four key financial statements for accounting, but for investment banking we need to only focus on the three. So the first one is the income statement, and second it's balance sheet, and third is about cash flow statement. We need to understand the linking of these three statements as well. Okay, so let's go to the first about income statement. So we have to understand what is about income statement. Basically, the income statement lists the company's revenue, expenses, and taxes, with its after-tax profits at the very bottom, over a period of time, 1 quarter, 1 month, or 1 year. To appear on the income statement, each item must meet the following criteria. First of all, it must correspond to the period shown on the income statement only. If you are paying for an asset that will last for 10 years or even 20 years longer, it wouldn't appear on 1 year income statement. And second, must affect the company's tax. For example, interest paid on the debt is tax deductible, so it appears on the income statement. But repaying debt principal is not tax deductible, so it doesn't appear on the income statement. And then we have to understand the bigger picture of the income statement. What is included in the income statement? So we have to know that the key components. So the first is the revenue, and second is cost of goods sold. So subtract cost of goods sold from revenue, we can get gross profits. After gross profits, we have to deduct the operating expenses. After we deduct operating expenses, we have to deduct the non-cash basis, such as like depreciation, stock-based compensation, and amortization of intangibles. And there we came to have the operating income. Once we have the sum amount of the operating income, we will deduct or added some of the expenses. For example, we have interest income, we added, we have interest expense, we deducted, we have a gain and losses on sales of PP&E. It depends on the situation that we added or deduct. And also we have other income or expenses. It's also income, it just be deducted, income is just be added, and the expense we just deducted. And here we came to have the total after all this multiple after all those calculations, we have the pre-tax income, and then we use the tax provision rate, which is tax rate that we have the income tax provision, and we deduct the income tax provision from the pre-tax income, then here we have the total net income. So today, we just need to make sure that for income statement, we need to focus on 4 main sections. First is revenue and cost of goods sold. Revenue is the value of the product or services that the company sells in the period year 1 or year 2, and cost of goods sold represent the expenses that are linked directly to the sales of those products or services. And second is operating expenses, items that are not directly linked to the product sales, employee salaries, rent, marketing, research, or development, as well as non-cash expenses like depreciation and amortization. And third is other income and expenses. This goes between operating income and pre-tax income. Interest show up here, as well as items such as gain and losses when assets are sold, impairment charges and write-downs, and anything else that is not part of the company's core business operation. And fourth is about taxes and net income. Net income represents the company's bottom line, how much in after-tax profit it has earned. Net income equals to revenue minus expenses and minus taxes. Besides, I want to point out a few points on the income statement: revenues, expenses, and taxes. First, they do not need to be related to the company's operational activities. Gain and losses on the asset sales and depreciation and interest expenses still appear on the income statement, but they are not related to everyday's business. And second, they do not need to be cash expenses or cash revenue. For example, depreciation and amortization are both non-cash expenses. Also, companies often record revenue and expenses here, therefore they receive or pay them in cash. Sometimes the item may be embedded in other items. For example, some depreciation is included in cost of goods sold and or operation expenses. Other times it is separately items as well. Okay, today we just go briefly about income statement overview, and tomorrow we're gonna go a little bit further about details what will be appear on the income statement and show you some example about the specific income statement. Thank you.